Hello Shrewd traders, this is Gary Ender with another free market update for ShrewdTrading.com. Let's take a look where we currently stand with both crude and gold. And we'll even throw nat gas in for a bonus market today. We'll start with crude. Crude has been in the bearish mode from the Shrewd trading model for almost 2 months now. We see that we had this attempted rally, or we could call it a rally, as it moves up, then it fails, making a lower high from this high that we have over in here, and obviously a lot lower from this high that we had towards the end of February. Big move in the dollar. We see commodities moving in the opposite direction. No difference here with crude with this very big move down. We see what happens when the market tried to hold at the swing low that we have over in here, finally breaks through. We have another swing low, and 94 was one of my targets. I thought that 94 had the potential with the right price action for a long position, but then yesterday's action, we closed below it. Today, just after midday on the U.S. session, we see crude slightly lower again, but with a lot of volatility in today's action. Zooming out a little bit, the next potential support from a swing low would be this blue trend line that I drew on the chart here. If the market regains 94 in the next few sessions, then we take a look at this Fibonacci retracement level that I put on the chart, which really gives us a range from this trend line, which is the old support around 96.75, all the way up to about 97.50. In there, we'd be looking for a range and potential resistance in that area. Beyond that, we're looking at the 50% level around 99, and then this would be a very difficult level if it got up here around 101. Now, keeping in mind, with the true trading model still being in a negative mode here, we'd be looking to sell any advances. So we'd want to know what those resistance levels are so that we could take advantage of any rallies that fail. It's too early to tell, but it's actually not going to surprise me if this today's low around 92 does hold in the very short term. But again, too early to tell. I've been talking about 1530 for my target on gold for quite a while. The last time we did one of these free market updates, we talked about this range that gold has been in. And gold has been in a bearish mode by way of the Shrewd trading model, or the STM, for several months now. We talked about the opportunity for a short position up in this area, came down with a target at this lower line. In the last video, I said that if it breaks the low of this day, that could be re-entered with a target down around the 1530 level. We've met that target. Both crude and gold, by way of the Shrewd trading model, are oversold at this time. So again, it wouldn't surprise me if this low of today, which was 1526.70, holds for a bit. But again, because we're in the bearish mode right now, we'd be looking for additional opportunities to sell this market. Nat gas continues higher. What's interesting here about nat gas is it moves up, consolidates here. It gives us a little flagging type pattern, and then it moves up again. It has a very slight consolidation right in this area here, and now we see it breaking above that. We can see that from a Fibonacci level, it's above the 62% retracement, and that's where that last little consolidation was. It's in a bullish mode looking for higher prices yet, and there's really not a lot of resistance between where it is now and up around that $2.80 level, and even a little bit higher than that. So the nat gas still looks bullish at this time. Before we go, I guess we should look at the euro-dollar, because obviously the U.S. dollar has a big impact on the commodities that we just looked at. In an earlier video, I talked about the euro-dollar being in this descending triangle. It also was on a bearish mode from the STM when it reached this high that we see up in here right at that trend line. It moves down with very little effort. It breaks down below these lows, which should have been pretty decent support, and we see it still moving down. My target, once it broke this descending triangle, was this 26-25 area right down in here. And it looks like it's running out of steam a little bit, but this is a pretty steep downtrend from the 3300 down into this area where it is right now, down around the 2700 level. What you'd like to see, since we're still in this bearish mode, is an aggressive move up to this 3,000 level and a failed rally at that point, giving a great opportunity to initiate another sale, again, since it's still in the bearish mode here. So be looking soon for another free market update. This is Gary Ender, Shrewd Trading.